What's going on, everybody? We are back with part 3 of our Market Master series, and this part is probably my favorite part, so it might be a little longer than our other videos. This is known as the technical indicator side, because I don't care how well the fundamental analysis you are, if you don't know when to get in on a stock, you will always be left behind and left holding a bag. So let's really dig into technical analysis and how we use that stock trading. So this is going to be the most popular thing you hear about in the stock world because everybody has a multi-million-dollar strategy that works for everybody, and that's why they sell it. I think the best strategy that you can take as a trader is a strategy that you understand and using indicators you understand. So we're going to go over some very popular and basic indicators that everyone looks at, because remember, if everybody looks at it, everybody's using it. So we're only going to stick to the long-term chart on here just for simplicity, but you can factor all these indicators in on the smaller time frame and the larger time frames. So let's go ahead and get into the first part, which is support and resistance lines. So if I'm using Thinkorswim, what I'm going to do is go down here and click on drawing tools, and I'm going to type in price level. And what I'm doing is I want to look at points in the market on the long-term chart that stocks tend to shift direction. So right here, you see the stock went up and then started turning down. So I'm going to mark that there. And if you go across the whole length of the chart to where we are now, you can actually see that we had the price come close right here again and then reverse the upside here. You want to draw these lines out on a chart, but you don't want to overdo it, guys. You want to keep it simple and really try to just show yourself, hey, where's the stock trading in what zones? So lastly, what we're going to do is we're going to find one more just because I see it right here. And it looks like we're right there at it. Okay, so what we just did, we just drew support and resistance lines. These are where the stock tends to pivot direction. Whether you want to call it resistance at the top and then support at the bottom. Imagine support as a floor and resistance as a ceiling. And you want to punch through, but you can't punch through a ceiling, right? It takes a lot of power to punch through a ceiling. Same thing with the floor. It takes a lot of force to step through a floor to break it. That's exactly what you need for market moves, and that's how you can use these to give yourself a basic entry or exit format. So, how do we use it? Good question. So what you want to do is after you've drawn out support and resistance lines, and how you do is just basically find where the stocks start to shift direction, and it takes practice to make perfect, all right? It takes time to find these points here. What I like to do is find your high points, find your low points, see where they consistently line up. So if you look, we could actually, if you wanted to take this one away here, we could actually move a resistance line to around this 260 mark because we touched here, and we broke through, tried to break back up, but we rejected and touched here. So this is a good, 260 is a rough, good estimate target for Tesla if you're bullish. Now let's look at the resistance side of that. Remember, we had resistance right here, and then now after we broke through the price, so we broke above this line, this former resistance is now support right here. As you can see, we came down, we touched it, and went right back up. Came down, started trading choppy around it, so it's respecting our support line here, and then traded up. Right now, I drew this line here because we have some consolidation. Remember, we talked about that in our first video? A consolidation point right here to where the price is actually trading between, I'm getting a line here. The price is actually trading between these two tight zones. A consolidation point, also known as a point where the stock's starting to squeeze in price, because you had these big moves to the up and down side, and all of a sudden you got real tight on your movements. And as soon as we broke up above this line, we ran right up to that old resistance line, which is at 260. It started coming right back down. Looks like we're going right back to 212 again. So this is the basics of support and resistance. We have another video out there on support and resistance you can check out on the channel to where we're going a deeper dive on how to really find these and draw these out. But I wanted to give you this quick example just to show you what we're talking about here. Next, we're going to talk about trend lines. Now, a trend line is when you look at a chart and automatically over the time of the chart, is it going up, down, or sideways? If you look right here, the chart is clearly going up because what we have is right here, we went up, came back down, we didn't go quite as low as we were right here. We went kind of higher than we used to be, and then we went low, and not quite as low as we used to be over here. So we tended to find an uptrend right here. We started to go down a little bit because if you see you got a high here, then you have a low, and you have a lower high because this price is lower than this price. And then we went down right here. You have a lower high, a lower low because you have a low here, which is lower than this one. Remember, this one, the price goes down, referred to as low. But I don't want to get too caught up in all of this chaos here. Okay, look at the long-term chart here. We had 1, 2, 3 right here. This was a big pivot point for us because it was right around that support line. Support and resistance lines are more important than trend lines, which we're going to draw right here. So if I were to grab this, they're not always going to be accurate when you draw a trend line. Just draw one out the get-go to show you the overall direction and then line everything up. All right. If technical analysis was 100% accurate, everybody would only do technical analysis. That's not the case. You want to see where the trend tends to touch the price the most. Say you had a big touch here. We could actually, if we want to get away with that, we could probably do that. So you could see touched in this area right here. It tested this area right here. It looks like we're about to touch it again. So remember, anytime if you're bullish, you want to enter close to this trend line. But remember, support and resistance lines are more important than trend lines. So we have a support line right here. So what we do as a smart trader is we wait to see if it touches a support line. Because we have a trend to the upside, and if it touches a support line, this gives us a high probability that it's going to reverse to 260 because we have this trend line backing it too. The overall trend is up on this stock, so we should be looking for buying opportunities. If the overall trend was selling, we look for selling opportunities, but in this case it's buying. So this is where you get into buying the dip. Because if you ran up here, would have bought the dip here, you would have made money. Would have bought the dip here, you would have made money. So now we're waiting for the next low to come into play, which could be right around this 214 to 220 level. You don't have to get it down to the cent. You just got to get within a couple of bucks and then make even more money than what you're risking, which we'll go into in one of our videos here in the future. So we have our trend line, we have our support, we have our resistance. And guys, I just picked Tesla. You can do this in any stock. I'm curious to see how this forms out when we do all of our technical analysis. So now I'm going to throw on an indicator. Technical indicators are very important to give yourself a trading advantage. In this case, I'm going to do the RSI. So what I need to do here, make sure I did it right. If I go to studies, I'm going to go to load a study. I'm going to edit study. Edit study, I'm going to type in RSI. What I'm going to do is I'm going to click on it. And that's going to put RSI over here on my trading window, which populates down here. Okay, so stick with me here. An RSI is a range of price action of a stock. Two things happen. You either have overbought or oversold. If it's overbought, people have bought it way too quickly, and you could expect it to pull back. We already had a video on RSI on the channel that goes into further detail, but understand whenever the price is above this 70 mark right here on the RSI, you tend to get into overbought territory and want to avoid buying company shares. When it gets into the oversold territory, you want to look at buying opportunities if you're bullish. Remember this line we had earlier? It lined up with RSI here and immediately went right back up. Look what it did right here. It immediately it hit this line here, hit this trend line, so it hit this zone and then went right back up. It's very popular for swing traders to use RSIs. If you use the RSI alone, you have an awesome high probability of getting in and out of trades. I think it's like 50 to 60%, but all things can happen, and you don't want to just bang too much on just an RSI because it sucks being wrong in a trade. However, these are different things you can throw in together. So let's look at it. Okay. So this big move, yeah, you missed the big move. That's okay. That happens. I don't care. But you can catch really good moves throughout trading. RSI is right here. It's right on the trend line. Okay. That's a potential buy. You could have caught that big move. All right. Now, look where the RSI is again. It's right there on the support zone, reverse the upside, but it wasn't close to that trend line, so it probably wouldn't have took that trade. Look right here. Now you have a trade, you have this stock trading between the trend line, the support zone, and the RSI is oversold, And look, it went right up to 260. That's a high probability trade right there. Just these three tools alone can give yourself an awesome trading edge. However, there's also other tools that we want to use, such as the max squeeze. Or I'm sorry, the MACD. All right, I love the MACD when it comes to trading. This helps you find trading momentum and see where people go from starting to sell off to starting to buy again. So what happens here on the MACD is anytime this blue line crosses above the yellow line below the volume range, which is here, these are just two different moving averages. Whenever this moving average starts to pick up the speed, that means that you're going to have a positive shift to the upside and could see the stock move to the upside. Vice versa, when it's on the top and that yellow line starts to cross over or the blue line starts to cross down, you start to see a sell-off potential happen here, which happened just right here. It went up a little bit, but it still sold off. So remember, you want to line this MACD up with your RSI and with your support and resistance and trend lines. Okay, so just see exactly what I'm talking about here. Just right here, you had oversold. MACD was starting to cross, because as you get better at it, you can start to see this little line curl right here. See the blue line really curling. Right at that trend line, right close to that support line, and with the RSI saying it's oversold, this is a great opportunity to buy a dip and ride it to the upside. Because that was a, let's see, right around $200, I'll say 210. You target 260, $50 a share. That was a 20% trade just right there that happened in, what, 2 months? So in 2 months, you could have doubled what you would have made holding the S&P 500. Okay, guys, there's so many videos out there on technical analysis and different indicators you can use to give yourself a trading edge. We're getting very far into this video, so I don't want to go too terribly long, but understand these key things. Find ones that make sense to you. Make sure that you incorporate support, resistance, and trend lines. If you do not incorporate those, you will fail. So make sure you incorporate these. But don't forget about your technical indicators down here. These are two of the most popular, and if they're most popular, everybody tends to follow them. So if everybody thinks something's oversold, everybody's going to buy. If everybody thinks something's if everybody thinks something's overbought, everybody's going to sell. That's why you use these. Understand what's going on. That way you can kind of think what other people are thinking, and that way you can be on the right side of a trade every single time. But guys, we're going to end the video here and get into our next video, which is volume.